let me tell you how this is going to work. We're going to be in a situation where once your checking account reaches a threshold of $10,000 worth of activity, then all of your information is going to start going to the IRS. To put that in perspective, the average family's checking account activity is about $61,000. So that's virtually everybody. So it's going to go to the IRS. They're going to hire 87,000 new agents. Part of those agents are going to be looking at that information, again, at a cost of $80 billion. At that point, if they see something that they don't like, they're going to start sending you a threatening letter. This is happening now.
Are you serious? Wow. So this is the crap that they pulling. Okay. What's up, guys? Welcome back to the channel. This is Ty with Opinionated Grind. I'm back again today with yet another video. So look, I want you guys to sound off down below, man. Let me know how y'all feel about this one. We talking about this good old IRS, man, Internal Revenue Service. Seems like they back at it again. Every time you turn around, it seems like they are coming after the little people. I'm talking about the middle class, the poor, the folks that just don't make no money. They always seem to come after those type of people. But you know who they never really come after? The rich. The millionaires, the billionaires, you know, tax loopholes, some of them tax invasions, it's crap that they're involved in. You know, these millionaires and billionaires, they have the money to hire top level CPAs. Once again, that no tax loopholes. They know the tax laws, the tax codes, because you know, they change pretty much every year for the most part. So they're able to avoid, especially when it comes to the taxes that they have to pay, they're able to avoid a lot of that crap. Now, I'm not saying that it's legal what they're doing or illegal. You know, I can't prove neither way, or either way, I should say, but I'm just saying they have access to resources, is my point, that the average everyday person that's working a 9 to 5 with side hustles, you know, or whatever your situation is, we don't have access to those same resources. And that's a fact. That's the same thing, guys, when we talked about the $600 threshold that was implemented a few years back under the Biden administration, right? How was that set up, guys? It was the same way. Once you made $600, it's got to be reported to the Internal Revenue Service. Whether that means it's through, you know, some type of side hustle, whether it was through gig work, you know, whether you were doing like Uber, Lyft, driving for DoorDash, you know, whatever the case may be. Once you made at least $600, it had to be reported to the Internal Revenue Service. When it was actually reserved for businesses, I think that made, I could be off a little bit, guys, but I think it was like $20,000 or more. It might have been like $25,000 or $20,000 to $25,000, I would say. That's what it used to be. But some kind of way, they done flipped the script and it went after, like I said, the little people. And this is no exception. So when we talk about this stuff, it's concerning, because you start to think to yourself, well, how far can Internal Revenue go with this whole situation, right? So are you like legitimately looking at my bank accounts in real time to see like how much money I'm pulling in and how much money I'm pulling out? Are you looking at my debt to income ratio? Are you looking at my income to see if, you know, say I owe money on my taxes, and you want to see what kind of deposits are coming in and out, and then you can say, okay, now we know that we can come after you legally for the money that you owe us. I'm just trying to understand, like, what is the point of this? And like he said, this is virtually everybody, because most Americans now, you're going to have well over $61,000 within a year of deposits. I mean, unless, you know, you got some other stuff going on and you're not making a whole lot of money. But even people that making money or not, you're going to have definitely more than $10,000. So it's like they set this stuff up because they know good and damn well it's going to be everybody. they're not going to exclude anybody from this situation, especially when we talk about the little people. All right. And to me, man, it's just a damn shame. But look, excuse me, guys, check this out. So I did a little bit of research on this because I myself didn't know this as well. Now, they've probably been doing this for some years, but you know, videos like this is good. It's important because you know, content creators like myself, we're able to share this stuff with everybody so that we're all, like I said, on the same page. Everybody gets the information, and then we can make, you know, an informed decision. Okay, but I pulled some information up on finance.yahoo.com, and I want to actually put it up on the screen because I want to kind of put this more in the context about what the Internal Revenue is actually looking at when it comes to this whole $10,000 reporting situation. So let's actually jump into this, get it queued up for you guys real quick. All right, and here we go. Should be right up on the screen. So it says, guys, do banks report deposits to the IRS? So the quick answer is yes. If you deposit more than $10,000, here's why. You've just deposited a large sum of cash or received an unusually hefty check, and now you're wondering, will the bank notify the IRS? Many people assume banks keep their transactions private, but financial institutions often have mandatory reporting requirements that might put your finances under IRS's microscope. Okay. Furthermore, knowing when and why banks report deposits can help you avoid unnecessary headaches or worse, IRS scrutiny. Here's a closer look at why banks have to disclose certain transactions to the IRS and what it means for your finances. All right. So there's just a little bit of information there. You guys can see that. This is according to H&R Block. You know, I'm just going to kind of breeze through it. So yeah, you can, you know, prep for tax season by gathering documents and necessary info to file your returns. Taxpayers do a refund should provide direct deposit information, and then it's a good idea to check with Tax Pro if you have a tax situation that's changed. But that's not really what we're talking about right now. Okay. Here's what we're looking at, guys. So do banks report deposits to the IRS? In many cases, bank deposits aren't reported to the IRS. However, banks do report deposits over $10,000. That is required as part of the Bank Secrecy Act, BSA. Note that this amount is the daily aggregate amount, meaning if you have multiple transactions in a day that add up to $10,000 or more, the financial institution must report it. Okay. Furthermore, guys, in this case, banks must either file an IRS Form 8300 or use electronic filing to report large transactions. The form is due 15 days after the transaction. Skipping ahead, guys, the $10,000 threshold helps detect and prevent money laundering. The Department of Treasury imposes reporting requirements on financial institutions to combat illegal practices. For instance, financial institutions also must report suspicious activity that could indicate illegal activity, tax evasion, or other criminal activities. This is why the BSA is sometimes called an anti-money laundering law. Okay, guys. There's lots more information on here. Says, you know, any other transactions reported. What does IRS do with bank deposit information? And then we kind of have some stuff down here as well, guys. Can the IRS look at your bank accounts? Now, here's the most important one. This kind of answers this question. The IRS primary duty is collecting taxes, and it sometimes goes to great lengths to ensure it receives as much tax revenue as possible. This may cause it to scrutinize certain transactions or income sources and inquire about them, which can happen if you're facing an audit or you owe back taxes. All right. Alternatively, you might have cash deposit without a reasonable explanation. For instance, they may not come from your reported profession. If this happens, the IRS may ask you for records to back up those transactions. And of course, if you refuse or you fail to do so by the deadline, they can come after you, pretty much. All right. Sorry about that, guys. My camera actually had ran out of memory and it stopped recording on me, unfortunately. But we pretty much went over the gist of the information according to the finance.yahoo.com's website. So, in a nutshell, as I stated earlier on in the video, man, they're coming after the little people. They watch us like white on rice, you know, but the funny thing is, a lot of everyday people, like average United States working 9-to-5 citizens every day, they come after us because they want to sit there and figure out, you know, what type of transactions we're doing in our bank accounts, etc. But again, you're not coming after the millionaires and billionaires. A lot of them are known for tax evasion. I'm not saying all of them do it, but tax fraud, tax evasion, that stuff happens with the rich. They don't want to pay their fair share in taxes. So again, they find loopholes in this stuff. Some of them are legal, some of them aren't. You see what I'm saying, guys? But they know how to find these loopholes to get themselves out of hot water and to keep more money in their pocket. But Internal Revenue Service, once again, doesn't go after these folks. They go after the people like us. We're not the ones money laundering. We're not the ones that's committing tax fraud. We don't, you know, the average everyday person doesn't do these type of things. But you have big businesses, big corporations that do this type of stuff. Now, I'm not gonna sit in this video and say who it is. That's not the point. My point is, you're coming after the wrong people. People are already struggling out here. You know, people already don't have money that they need to survive on a day-to-day basis. And then they have to now worry about deposits that go into their bank account. And then they have to possibly be, you know, get letters sent to them, you know, over this tax fraud situation and all this stuff. And you know, they have to worry about getting reported over something that they have nothing to do with. And it's not right and it's not fair. So that's what I got to say on that, man. Somebody made a comment on the original post and they was like, you know what everybody probably should do? They was like, take your money out of the banks. And I'm gonna say this, guys, me personally, I agree with that. You may have to go back old school, money in the shoebox type situation, man, because the way things are going right now in 2026 in this country, it's just more of a push to keep people broke. And on top of that, you got jobs that's not paying. Like I said, people are broke. They don't have the resources. They don't have the funds that they need. They can barely pay their bills. And now they have to worry about IRS being up your butt over what? Over possible tax fraud and tax evasion and all this kind of stuff. And possible money laundering, as I stated before. When, like I said, most people aren't even doing that. But the folks that are, you're not watching them. Some kind of way, they fly under the radar and nothing happens. So that's what I got to say on that, man. Like I said, y'all comment down below in the comment section. Let me know how y'all feel about it. Like the video, share the video, and most importantly, make sure that you guys hit the subscribe button. So I appreciate y'all watching. I'll catch y'all in the very next one. All right? Peace.